Good afternoon, everyone. Thank you for joining us and welcome to this AHDB Dairy webinar, Managing Finances to Future-Proof Your Business. I'm James Haig, Knowledge Exchange Manager with AHDB Dairy, and I'm joined today by our SDF host in Cumbria, Adrian Bland, Colin McPhail from CA McPhail Consultancy, and David Owen from Owen Farm Services, both of who are part of the 5Agri Group. Today we're going to hear from Adrian, the steps he's taken to accurately record his financial data to enable him to undertake an honest appraisal of his business, along with Colin and David providing some top tips how to evaluate the finances of your business and how to create an action plan. For today's webinar, everyone is muted to avoid any sound interference, but I do encourage you to participate and ask any questions you may have throughout the webinar using the chat function. You'll find this if you click onto the orange box at the top right-hand side of your screen. Any questions that we don't get round to answering, we'll reply to individually after the webinar. I also want to reassure you that other delegates attending this meeting can't see the questions you submit, so please be assured that you can ask anything confidentially, even if it seems like a silly question. Today's webinar is being recorded and it'll be available for you to enjoy over and over again on YouTube, where you'll also find previous recordings of other AHDB Dairy webinars too. And if you're registered with Dairy Pro and you want to collect your Dairy Pro points, just submit your name, address, email address and Dairy Pro number in the comments box and we'll be happy to allocate your points to you. If you've not come across Dairy Pro before, this is a way of recording your continual professional development by providing a record of all your activities in one web accessible place. The Dairy Pro website has a calendar of events and training that you and your team can tap into. And finally, we'll be referring to various AHDB Dairy business resources that are available to you all, and we'll be emailing links to those relevant resources to everyone who has registered to attend today. So SDF events like the one that we're taking part in today are a key part of encouraging best practice and inspiring change. If you take a look on the SDF pages on the AHDB website, you can find an overview of each of these farms, their focus and their KPIs. So do take a look, have a look for a farm that aligns with your system, then you'll be able to benchmark your KPIs against theirs. Including Adrian, we've got 22 farms on board, but we are looking to move to 25. So if you're interested in joining the SDF network, especially if you're located in the areas highlighted within those red circles, we're particularly targeting for new farms to join, do get in touch with us. Today, you'll hear about KPIs, which are key performance indicators. AHDB have the KPI Express tool to help with this, which focuses on 9 targeted KPIs that you can look at for all year round and block carving systems. This is going to become an even bigger part of what the industry needs to be doing. Some people will be way ahead of these 9 KPIs, but others may not, and this tool will be able to give you that chance to measure your business against yourself year on year, but also against other people. I do encourage you to use the KPI Express tool. The industry targets are there. Registration only takes a couple of minutes. It doesn't need a lot of detail to set up your farm on the system, and then you're straight in to be able to measure your KPIs. The opportunity to be able to challenge your business by measuring is one of the key areas of trying to drive efficiency and profitability. So without further ado, I'd like to bring Adrian in just to hear a brief update as to what's been happening at Ninezergh since we had our last meeting with you, Adrian, in November.
Yeah, in mid-November we were on about cell counts. So on that front, we seem to have got quite a good handle on where we're going and how we're going to cope with that. We're now doing monthly testing, and we've highlighted maybe 2-3 cows. Unless we can get them under control, they're going to have to go. 2 cows are 42% of the cell count in the last test. So yeah, that's good. We're heading in the right direction with that. The production wise, we have managed to reduce bought in concentrates by 1.2 kilos per cow per day. We've gone this year, I keep threatening to do a total TMR. I haven't quite been brave enough yet. We're taking maintenance plus 35 off the trough, and there is only 3.5 kilos, 4 kilos of concentrates in that trough because the rest is maize, homegrown maize, fodder wheat and silage. So yeah, quite pleased with them, the way we're going there. The downside is our fertility. We did say we're going to try sex semen, which we have done. Our scan results are quite disappointing, really. The AI, we've got a 42% conception rate. Slightly better with the conventional semen and slightly worse with the sexed. So I can't fully blame sex semen for the problems. Not quite sure what we've done wrong there, whether we got the diet wrong, whether we don't know, timed our AIing wrong, not quite sure, but we need to address that for next year. We've had the bull in, sweeping up. He's done quite a good job with the cows. The bull in the heifers, unfortunately, hasn't been as proactive. So yeah, we ended up with quite a few gelt heifers, which we'll just have to run round and bring as the 3-year-olds. So yeah, slightly disappointed with that one. We always say we don't want to calve them too fast, so we're not usually too bothered, but we also need enough cows to bring in, heifers to bring into for our replacement. So we won't be selling any new cows next back end, unfortunately.
No problem. Thanks very much, Adrian, for that. Just like to bring David and Colin in now. If you can both introduce yourselves. David, can we start with you?
Yeah, sure, James. So my name is David Owen. I run a consultancy based in the southwest of Scotland called Owen Farm Services. We have 6 consultants in the office now. We're based in the southwest of Scotland, but we do cover most of Scotland and the northern half of England, really. And we are part of the 5 Agri network. We do have a dairy farm at home as well, so I wouldn't describe myself as much more than the Sunday boy, but only if Christmas lands on a Sunday generally. So, but it's good to have the practical background, I think.
And Colin, if you could introduce yourself.
Yeah, good afternoon. My name is Colin McPhail, and I work as a consultant in my own right, but also as part of the 5 Agri group, like David. My background is I come from the West Coast, and we've got a hill farm on the West Coast. But yeah, I do have some dairy experience, and probably quite relevant today is my experience in running monitor farms in Scotland. We've recently ran the Lothians and the Border, so yeah, looking forward to the session.
Good, as we all are. Thanks very much for that, Colin. Just a reminder, there's quite a lot of people registered to attend today and have joined us. At any point, if there's any questions, just fire them in the chat box and we'll put them to our speakers for today. But without further ado, I think, Adrian, you're going to set the ball rolling. Just tell us a bit about the story, the background.
James, do you mind if I just come in just to give a wee update on what we're hoping to cover? Would that be okay just before Adrian starts?
Yep.
Yeah, so I think the plan for today is our experience. You know, it's much better farmers speaking to farmers, and it seems to come across really well, and we can all relate to each other. So I think we're going to try and tell Adrian's story today, and take us through his journey in benchmarking. But just before we start that, James, if you don't mind, I had a couple of questions I wouldn't mind asking Adrian just before we get started. And so, Adrian, I'm conscious that there might be a lot of people on here today that some will be quite experienced in benchmarking, and some will just be new to it or looking to get into looking at their figures and benchmarking. So, again, we've only just had a couple of phone calls before this meeting. I just wondered, can you give us just a bit of background about the farm, just briefly? You personally, the farm, family, etc.
Yeah, well, I moved into the farm in that dreadful year of 2001, which is foot and mouth year. We would try and erase that from our memory. So I moved in, and I don't know when you actually officially take over from your father. You slowly start in your early 20s and slowly push him out, or he became a county councillor, which gave me a lot more breathing space. So yeah, by the time I moved in, I was fully running the farm. We've always milked 120 cows, right from my early 20s when I took over the cows, and we lambed 1,600 sheep back then. Opportunity came up to take up some extra land about 15 years ago. It was a big argument with my dad. He wanted me to go to 2,000 sheep, and I said not a chance. I'm saying I'm going down the opposite direction of, we were at that point buying in lots of bruised grains, lots of pressed pulp, lots of beet pulp, buying in acres. And in the mid 2000s, the subsidy per acre was more than what we're having to pay in rent. So I thought, well, actually the land's technically for free. So therefore I took it down the road of producing as much as I can on homegrown ground, which is when fortunately this ground we took on was capable of growing a lot of maize. So we gave up some small areas of land and took on a large area and basically turned it on its head, went from buying in hundreds and hundreds of tons of dry matter to producing everything on farm ourselves. So, and that's sort of the ethos we still have today. I very much try and grow everything I can on the farm and buy as little as I possibly can in, because that's adding cost, especially when you start buying concentrate that's gone 2 lots of haulage to get it in and out of the feed mill, commission for the salesman and stuff. So I tend to try to buy as many straights as I can. The only concentrate I buy is for the young calves and for the dairy cows in the parlour.
Good. No, that's good. And you're on 3 or 4 different sites. I think, do we have a slide of the farm, James, that we can share just to give everyone a bit of a flavour of? Yeah, that's it. Good. So yeah, so that's the layout of the farm there, Adrian.
Yeah. So where the little yellow balloon is, that's where the farm itself is. The buildings. That's where my dad started from. That's where all the buildings are: the cows, the silo, the silage pits, housing for the we'll have the sheep inside. So there's housing for, let's say, 1,000 sheep. There's only 500 in there now. And as you can see, everything. I try not to be a concrete farmer and cut everything in that, but we do spend an awful lot of money on diesel, moving, feeding, and slurry out. One of the areas of land is a lump of parkland, and the restrictions on the tenancy on that is we're allowed to summer 30 head of cattle on there, and the rest it has to be sheep. So we have to farm that land with sheep.
Okay, no, that's good. And the various enterprises you've got dairy, beef. I think we had a slide on that as well.
Yeah, we as I described to most people, the dairy cows is the business, the beef's my sport because you stand a sporting chance of making money, and I describe the sheep as a hobby because they're not very productive and you don't have to make money out of a hobby. So that's the sort of ethos I have with the farm. So the main concentration, the main focus is the dairy cows. We've restricted to 120 in that we would have to spend on the buildings. The issue is I don't think there's any point putting 30 or 40 on. If I'm going to do anything, I have to double it. If I double it, I haven't got enough grazing, and I'm not keen on carting any more forage back here than I have to. So yeah, so that's why the dairy cows are stuck at 120. I'm also tend to get bored very easily. So if I was just milking cows and doing nothing else, I think I'd be fed up. So I like the variety of the fact that we've got different enterprises. Look forward to lambing time starting and look forward to it finishing as well, because I've got fed up after about 4 weeks and want to be moving on to the next thing.
Good. No, that's good, because that leads on quite nicely to my next question. In terms of what kind of guy are you? What makes you tick? What motivates you? Your interests? Is it the dairy, machinery, beef?
Variety is what keeps me going, and challenging, constantly challenging. About 4 or 5 years ago, I turned to my wife and said, "I'm bored." And she said, "How can you be bored with all this too?" I said, "Well, there's no mental challenge because everything's just ticking along nicely. Got it where I want it to be." And then I met LIC Grazing Group, and that opened my eyes to the fact that I was being very inefficient in certain areas, and whole new challenges that we are still trying to get our head around now, including outwintering cattle on fodder beet, which 3 years ago I said I'd never do, and we are lining up to outwinter 100 bullocks this next winter.
Good. And what personality traits are you? What colour are you? Have you done any of that stuff?
Oh, I'm red as red can be, I would say. Well, yeah, with a little bit of ideas, man, thrown in there with a mix, because I'm always open to new ideas, and I'm never frightened to do something new. When I first took over the land down the road, the comments that were coming back were, "God, what's he up to now?" But if you don't try something new, nothing ever changes. And if, as I said to everybody, if nobody ever tried anything new, we'd still be living in mud huts and making hay with a fork, wouldn't we? So somebody has to be prepared to push the boundaries, and I like the challenge of pushing the boundaries.
Good stuff. So you're a kind of let's do it now guy. That's good. I think we'll probably get on quite well. Right, good. Just lastly, before we start looking at the figures, what I usually ask a lot of clients this: what's your vision for the next 5 to 10 years?
I have a plan A and a plan B. My children, I have a daughter who's 17, just finishing a BTEC in business, and I have a son who's 16, supposedly doing his GCSEs, but he's not very keen on doing them, and the scheme doesn't seem to be very keen on him going back. He hasn't even gone back yet. So the plan A would be one of the children come home, we expand and set the farm up for the next generation. A bit like what my dad did when I came home. He was in a position to spend some money, so he did, and invested so that I could, to a degree, reap the profits of that investment. And so I'm sort of plan A is to do that, reinvest, set it up so there's 30 years worth of profit going forward for the next generation. Plan B is do the opposite. And I said to myself, I started milking cows at 21. My dad had a sale when I was 21 and said, right, they're yours. I certainly won't be milking them at 61. I'm intending not milking cows myself by the time I get to my mid-50s, and enjoying life a bit more. As we've discussed in the past, the bucket list is to do the Mongolian Rally, which is buy a car for less than £1,000 and spend less than £1,000 doing it up and driving it from here to Mongolia, and generally having to repair it every where on the way. So yeah, things like that I've never had time to do because I've been far too busy farming to enjoy life. So
no, that's great. It's good. It's just to get a bit of insight into what you're thinking. So yeah, I think we'll move on probably to the benchmarking journey. So do you want to talk us through that? I think we've got 2 or 3 slides just to share probably the historic stuff first, Adrian, and then where you've gone in the last couple of years. And David might we can bring David in here if need be.
Yeah, so as I say, we bumped into or got invited to LIC, and I'm now in one of their grazing groups run by Bess, who is very good. She keeps me on the straight and narrow, which can take a bit of doing at times. So she's great. She pulls us all together, and the grazing group, you've got 12 farmers, and the beauty about having 12 farmers is you've got 12 consultants in the room who've all done it, tried it, got it right, got it wrong, and I'm prepared to share their ideas. So we got on that line of thought, and we made to do our CFPs, a comparable farm profit, and I did mine the first time, and I thought, well, this is a bit of a joke. When I say a bit of a joke, I mean the figures weren't accurate; they were just all made up. And I started thinking, well, how can I make business decisions if I don't know my costs? If I don't know which enterprise is costing, profitable, which isn't, and where the costs all go. I mean, this slide is about milk production mainly. So you can see in 2018 we were just learning how to paddock graze. We've properly got our heads around that now, and we're doing it with young stock as well. And the difference is like night and day. It's just unbelievable. We're carrying 50% more cattle on the same ground that we were carrying 3 years ago. So that's potentially, in theory, more than 50% more profit because you're spreading the costs over the same costs over a bigger number of head. And then last year, looking at this slide, last year we had a bit of a problem. I'm not sure what happened, but we turned out early March, like we do, mid-March, like we do most years. And the cows usually go out very fit and milk off the backs and lose condition and carry on milking. Last year, they didn't lose condition. They stayed fat and they slowed down milking. So our total production last year was down a bit, which is what's reflected in the fact that the litres from forage is down because it's total production that was down. I'm not quite sure why, what we did wrong. Last year when we turned them out, we did literally give them 1 kilo a head a day and make them milk off grass. So some of them cows were still giving 36, 38 litres. So maybe we're a bit hard on them. This year, I think we'll probably take maintenance and 20 off the grass and feed cake on top of that. So we end up being a bit of a hybrid system between TMR and feed to yield. But I try not to fall between the cracks and end up doing the worst of both worlds and try and end up doing the best of both worlds. But it's not always possible.
Okay, good. David, have you got any comments just at the moment on that slide?
Yeah, I think just to highlight all the numbers there come from the KPI Express tool on the AHDB website. And obviously benchmarking, and we'll come back to this theme, I think, as we go through this presentation. Benchmarking against yourself as a farm is probably the absolute starting point and the end point to an extent, because every farm is different. So yeah, the milk yield from forage, very much a technical KPI. And as Adrian says, that could be anything from weather to other nutrition to lots of different factors that affect that. I think the interesting thing for me was the economic cost of production. Just as you've changed system, you can already see the benefits of that coming through. So I suppose it's highlighting the forward potential of that. When you get the milk from forage coming back up the way, what effect does that have on the cost of production? So that'll be an interesting one to look at into next year.
Good. So Adrian, you've gone a bit more deeper into some of the figures. So do you want to just talk us through that process of what you've done?
Yeah, that was the whole driver of becoming an AHD monitor farm. One was the fact that I really liked the grazing group theory of 12 farmers in a room sharing ideas. I wanted to expand that really. So instead of having 12 farmers in the room, have 50 farmers in the room all sharing ideas, and you learn something off everybody. So that was one of the drivers. The other driver was obviously having had done my first CFP, I needed to get a handle on my costs and be able to apportion them out to each individual enterprise. So I knew where the profit for the farm was coming from. I'd always done sort of in my head figures are so like the daily cost to feed a calf, the daily cost to feed a bullock, and summer a bullock and a heifer and a cow, and output per hectare for the sheep enterprise and the dairy enterprise and the rearing calves. So I'd always done all that just as I went on, but never really got a handle on the overheads, like and you need 2 members of staff. You're going, well, where's all that time going? So that was another reason to join AHDB, because sometimes you need a stick, and the stick was, if I joined them and I said I was going to do it, I'd have to get on and do it, and then hopefully get a bit of a help in the process, which is obviously how Colin and David are sat here now. They're helping me understand the figures I've come up with. So
I'm hoping, Adrian, that you found the process a bit more of a carrot than a stick.
Well, a catalyst would be maybe a better way of describing it. I don't know if I'd have done it if I hadn't said I would do it, if that makes sense. And then Doreen came down to see me, and we sat down in front of the computer and started feeding all the stuff into the AHDB. I can't remember what it was called, their
Farm bench
program, Farm Bench. And I went, gosh, this is unbelievably complicated. We are putting figures in twice because we've already put them in the accounts and stuff. So I changed bookkeepers, got a new bookkeeper that was very keen and came on board. So all the invoices, every single invoice that comes onto the farm is allocated to an enterprise. We haven't gone as far as like with the dairy cows with CFP, you're going bedding costs, AI costs, and we haven't drilled down into them as yet. We may do that going forward, but this was maybe step one, where it was every single invoice that could be allocated was allocated. And then we went, well, what the heck are we going to do about the time? So we had a bit of a scrat and a think, and we came up, in the next slide, James, please, is the timesheet we came up with. No, oh, that was the, can we go on and come back? Is that possible? Can I be awkward? Yeah, so we came up with the timesheets. So along the top is effectively the enterprises we came up with to settle a portion of the costs out. So dairy, beef, sheep, young stock, heifers, it was fairly obvious. So the young stock was feeding into the heifers, because some of the young stock became heifers, became dairy replacements, some became beef. So, and then we talked to the lads that worked for me, and we came up with the other few. And basically how it worked was on these two lines, one for on a Monday, these two lines horizontally, one for each member of staff. And he wrote the hours down. So for the dairy, if he was doing dairy, he put 3, 4, 5 hours for dairy. If it was on a tractor, how we came up with was if you're on a machine, you wrote the hours in the red box. If you weren't on the machine, you brought them in a white box. And then at the end of the month, my wife begrudgingly added them all up. And so we had a total hours on each enterprise and a total machinery hours for each enterprise. So we could then try and apportion the machinery costs out, because we do most of the machinery work ourselves with very little contract work. So we needed to get a handle on that, because it's quite a big machinery repair bill and depreciation bill. So yeah, this is what we came up with. It seemed, seemed the best solution to the problem. But yeah, not particularly easy, because you jump in the vehicle to go down the road, or you go and look the sheep, and then you do something with the bullocks, and then you go around the maize, and on your way back you check the dry cows, and you get home and go, right, hang on a minute, what have I just done, and where do I apportion that time? But unless you start somewhere, you never get an answer.
Okay, good. And what were your findings, or what surprised you when you done this exercise?
What surprised me was how hard it was. I think that was the biggest thing. And the staff at the start, the first 2 months, so we started mid-October last year, the first 2 months they handed the timesheets in, and I kept saying, "Come lads, you got to try a bit hard, you got to try a bit hard," because we were coming up handing them back with 6, 7, 8 hours miscellaneous, and I'm going, well, we did a bit here and a bit there and a bit there. I said, well, hang on, that's not the point of it. And they were like, oh, do we have to do it? And I said, well, yeah, you do. They weren't right keen, but once they sort of got their heads around it, I said, look, I'm not after. We're not checking up here. We're just after your best guess. And so once they got the head around it, and I said, it's just your best guess, and just give us an idea. So yeah, the effort. I think what surprised me, how much effort was involved in the timesheets. Even my wife was ticking me off when she's coming. She says, well, you've only got 4 hours down here. You did more than 4 hours work that day. I was like, oh shit, yeah, all right then. But then I make excuses, because when I was sat in the office, I said, yeah, but when I'm sorting stuff out in the office, you sort one thing, then another, then another, then another, and I said, well, I'll put it down as miscellaneous time or management time. And I thought, well, hang on, I can't do that. I've got to lead from the front, and I've got to put it down as an hour for dairy, an hour for beef, half an hour sorting where you're planting maize, whatever. And yeah, the results at the end, I was surprised that I thought the dairy would have taken a huge amount of time, but actually managing the cows took very little time compared to what I was expecting. But the time for growing the grass, the time for growing the maize, the time for all that was apportioned to the grass, and then the grass costs were apportioned to the dairy herd. So the true hours for managing a dairy herd aren't actually there, because some are hidden in the cost of growing the grass, looking after young stock, growing the maize. So yeah, we got a definitive figure for enterprise, but so when we went back to CFP to do that with LIC, they went, yeah, well, your hours for your dairy cows aren't very high. And I said, yeah, well, that's problem because it's hidden in the maize cost. So we put the maize cost into the dairy herd as one lump, as in total cost, a percentage of the total cost of maize. So if you go back to where we were, James, that mix sheet, so we then had to tackle where the maize went, where the grass went, where the silo went that we grew. So we came up with these. On the left-hand side there, you see the total figure is 7,900 kilos. That's effectively what the cows are supposed to get per day. So 120 cows, which is on the right hand side, and then they were supposed to get 1,100 kilos of silo, 750 fodder bait, 5,000 of maize, and then across we did alter them from time to time, print one out every week, but sometimes I print them out and go, oh shit, I'm not happy with that. As you can see, we've altered this one, and then if you go to the next slide, James, then the lads have to then fill them in. So this is filled in sheet, so they write down exactly what they put in the box. Now my argument was, I'm not good enough to put exactly 250 kilos of rape in the diet feeder every single day. They said, well, yeah, but you don't feed the cows and leave it to us. At which point I went, all right, I better shut up. They probably are that good. I'm not. And the maize was the balancing figure. So the total is on the right hand side. So some days, if there's a little bit left in the trough, they would cut the maize back a bit. So as you see, we set off at 8,000 kilos at the top, and then the cloth wasn't quite getting cleaned out, so they reduced the maize content of the diet until the point we clean the trough out every day, to the point they were happy with it, and then they carried on at that level. So we then added all these up, totals at the end of the year, and then we had what we could use then was a percentage for where the maize went. So we ended up with some figures for total tonnage of maize and the percentage that had gone to the dairy, the beef, the sheep. So then the total cost of growing the maize was then allocated to the dairy, the beef and the sheep on that basis.
Okay, good stuff. I think if we've got, I'll probably bring David in this next bit as well, because I think we've got a slide, haven't we, of the timesheet splits on the labour and the machinery, just how they worked out. It'd be interesting to see. Yeah, so that's the splits there, Adrian.
Yeah, so that's the total. Yeah. That's the total labour split and the total machinery time split. And like I said, I was quite surprised. The total labour for the dairy cows was only 34%. But as I've explained, to get the total labour of the cows, you'd then have to take some of the labour for the grass, some of the labour for the sheep, and young stock added in to would then bump up the labour. Because if you do it on livestock units, which is what we did originally, the dairy enterprise is about 50% of the livestock units. So I was assuming it would come out 50% of the labour cost. And I guess by the time you've added your bit from your beef, from your maize, your grass and your silage in, you'd be probably getting pretty close to 50%.
Okay, David, because you looked at some of these figures, and what was the main things that you picked up from them?
Lots and lots of detail. So, I think to those watching, I think it's probably fair to point out that this is above and beyond what we normally see available to us as consultants to analyse. But it's been a fantastic exercise to then split up labour and power and machinery costs. So no, just echo really what Adrian said. I think it's maybe the expectation was that the dairy would have been higher, but there's an explanation for that behind it. And yeah, it just goes to show you just can't assume any numbers behind it, but a good bit of detail. You touched, Adrian, just on maybe a bit of hesitance from staff. Was that a tough conversation to have with the staff, or?
Yeah, there was a little bit of it takes too long. We finished our day's work and you expect us to sit down and do this. And I said, well, actually, it takes you about 2 minutes. And so once they got their head around it, they were all right. The bookkeeper that came in, that's come in to help out, she comes once a month, pays the bills and does the VAT and the PAYE and keeps an eye on what we're doing. She said, when I said, they're a bit reluctant, she said, well, just tell them when I worked for the accountant I worked for, she said I had to write down every 15 minutes what I'd spent my time on because they wanted to charge my time out to clients. She said every 15 minutes through the working day, I had to write down what I'd done in the last 15 minutes. Because she said even after an hour, you were struggling to remember, or you'd done a bit of photocopying here, or you'd answered the phone there. So when I said to them that, I said, well, come on, lads. I said, she was doing it every 15 minutes. I'm only asking you to do it once a day, and I'm not charging your time out, and it's not critical towards the profit of the business. They sort of accepted it and got on with it. But we did it for 12 months. We did it for 15 months, starting October, and we did it to the end of December 2020. And when I told them after 2 weeks in January that we weren't going to bother carrying on, they were really pleased and that we'd stop, but quite annoyed that they'd had to do 2 more weeks that I wasn't going to use. But yeah, I think we may revisit again in 2 or 3 years, but it's given us some numbers that we can use, and we'll just roll the percentages forward. And until there's any fairly drastic changes in the farming structure, I don't think there'll be drastic changes in the hours sheet. But yeah, it's definitely been a very worthwhile exercise, because up until that point we were just guessing, and if you're guessing, you're wasting your time. What's the point? If you really want to make a management decision on whether you should change an enterprise or give up on enterprise, with a completely mixed farm like I've got, you've really got to know what's profitable. Otherwise, you tend to, as well with figures, you tend to lean towards the enterprise you like. So you tend to be a bit harsher on the one you don't like, just naturally. You don't really realize you're doing it. And I was quite surprised. The other ones, I was expecting the sheep to be literally almost treading water, not making a profit. Just the subsidy basically from the ground that we were farming for them was the profit in it. I was quite surprised when they came out and actually created a profit in their own right, which was nice. And I think when I'd been doing it, fag packet calculations, I'd been hard on the sheep on the fact that most people were telling me there was no profit in sheep. So you tend to believe what you hear, and it influences the way you do your figures.
Yeah, no, that's good, because I think there was a slide, wasn't there, the contribution to profit. Have we got that? And you could maybe both just talk us through that.
Yeah, I'm going to put a disclaimer on this slide before we even launch into it. So for any accountants and bank managers watching, the word profit is a bit ambiguous on this slide. So what we did, or what Adrian had done, I should say, was essentially taking a gross margin for every enterprise and then allocate the main overheads. So allocated labour out, allocated power and machinery out, as discussed in the previous, and even some property repairs and bits and pieces like that, and then allocated them into the individual enterprises, which has given us a profit which is neither a gross profit nor a net profit. So it's a bit of a hybrid between the two. But it has given us some interesting numbers to look at in terms of where the profit comes from in the business. I don't, for me, there wasn't any major surprises in that. I would just highlight, yeah, sheep potentially higher, but going through some reasonably good times. Dairy average times, perhaps. But I think the one that still stands out to me, and I don't think we should shy away from it or be embarrassed by it, and then we get paid a subsidy for a reason, but it's still quite a chunk of the farm's overall profit.
Yeah, so what we did, like David said, I allocated as much as I possibly could on the invoices to create the gross margins, and then allocated as much as we sort of possibly could on the fixed costs. But there was certain fixed costs like office, bank charges, things like that were really, really difficult. There were maybe costs to running the business. So whether you had been a dairy farmer or you'd been a haulage company or a machinery repairman, there were sort of overhead costs that you would have carried irrespective of what business you were running. And I found them almost impossible to allocate, which is why I haven't done as yet. I'm hoping Colin and David are going to come see me one day and finish the job off, so to speak. But yeah, like I said, the biggest surprise was nice surprise was the fact that the sheep were actually turning our profit. Because I was expecting them to just tread water and the subsidy be the profit within that enterprise. So yeah, I was quite pleased about that. And yeah, I am aware that subsidy is a reasonable chunk of our profit. That's probably because of the beef, probably because of the sheep, because the sheep do take a reasonable chunk of land compared to the output that the profit we've got for them, because obviously, as I explained, there's 150 acres of parkland that I can't farm without sheep. So if them sheep weren't there, that land wouldn't be there. I can't put cattle on it, certainly can't walk my dairy cows down to it. it's a bit of a shame, really. I'd love to carve it up and paddock it up, but there's also 150 deer running around in there, which I think would love to trash my electric fences. And the landlord won't let me do it, so I either farm it with sheep or I don't farm it. So at least them sheep are contributing to the profit, because there was a debate a couple of years ago whether we should even bother keeping the land and carry on farming it. The other justification I have for that land is farming the sheep is it means I have 2 full-time members of staff, which means we only work one weekend in 3. And having spent 25 years working every other weekend, and in my younger days working every weekend, it's a breath of fresh air is one weekend in 3, and I'm not in a big rush to go back to every other weekend. So if it means carry on farming sheep so as I can have one weekend in 3 at work, then I'll carry on farming sheep as long as them sheep are justifying their own existence, which clearly they are at the moment. If we'd sold all our lambs before Christmas, if we'd been astute enough to hang on to them all, I sold 30 yesterday. I went through and got a few of my hogs. I thought, stuff it, let's be having some of them go. So some of what we're going to be breeding hogs went into the auction market yesterday at £122 a head. So if them prices carry on, then the sheep are going to become quite profitable.
Yeah, no, that's good.
Sorry, Colin, go on.
Sorry. No, and I think it was just a really valid point Adrian made, about the balance. Sorry, James.
Just having a look at one of the questions that's come in, Adrian. You mentioned before about how the conversation that you had with the staff, influencing them to keep the timesheets updated. But talking to staff members is one conversation, but perhaps any farmers that are listening, or perhaps if they want to influence family members just to fill those timesheets in, what tips or what would your advice be, the benefits that you've seen? And perhaps David and Colin, if you've got any thoughts on this as well. But Adrian, if you want to go first.
Family members, it's very easy, because you say, look, we've got the family member, I assume, has a stake in the business and is wanted to be profitable. So that's fairly easy. You say, well, if you do this, we'll work out where we're making money. Staff members, staff members are very good. They buy into the fact that I have to be profitable for me to be able to afford to pay them a good wage, and I'd like to hope they're on as good a wage as any other farm member of staff. Again, they're quite keen to be here, because it means they only have to work one weekend in 3 as well, and they're happier to put an extra hour or 2 in on a weekend rather than having to do every other weekend. So you are on your own. Well, not quite now, because my son since Christmas has volunteered to feed up every Saturday morning, only because he was not at school and being lazy and not doing anything. So he had to do something. And the staff just point out to them the fact that lots of other staff members have to fill timesheets in. Mechanics, anybody whose time is charged out has to fill a timesheet in, and to them it's normal. You take your tractor or your car into the garage, it's worked on by a mechanic. That mechanic has to fill a timesheet in to hand into the boss, so that boss can then. So it's not. Lots of people do it.
And just remind us, Adrian, there's 2 staff members at Ninezergh, isn't there?
There is, yes, 2 full-time plus me.
Okay, thank you. Colin, David, anything to add?
I think probably it can be less challenging, but it can be more challenging within a family business too, because it depends sometimes what the individual's interests are. And I think it's back to the question asked Adrian at the beginning, what colour are you, what interests you? Because some people are driven by numbers and finding it out, and some are not. So yeah, I think it's just there's no easy answer, but I think Adrian put it pretty well. If you want to know how you're doing, you've got to try and record some of the data, and I think we'll all have to do that going forward. So no, I don't think it's particularly. It just depends on the individual situation. Is probably what I would say. Good, David. Have you got anything to add there before we?
Just very briefly, I think particularly with family members, it's there's quite a wide variation of how involved they are within the business. So I think to an extent, treat exactly the same as staff. And if you're asking them to do something, make sure they're fully understanding of why you're asking. Don't just ask them to do something for the sake of it, and make sure they're engaged, I think.
Good. No, that's
Thanks,
good.
Just a reminder to everyone listening, keep the questions coming in. I'll keep putting them to the speakers as we go along. But back over to you, Colin.
Okay. So I think what we've got one more slide that David's maybe going to talk through just in some of the ratios, and then I think we probably want to just cover, what the benefits we've got out of the benchmarking, and also to, how do we take this forward. So David, I'll just hand over to you.
Yeah, thanks. I'm very conscious now that Adrian gets bored very easily, and I've been lined up to speak about margins and ratios, so we'll see how it goes. We've put on this slide basically five quick ratios that anybody can do. We would do these as a consultancy on a set of accounts. It's highly likely that your accountant, bank manager would also do these with others as well. So I just wanted to briefly go through these and sort of explain what they are, explain what we can do with them, and give you a bit of a steer on that one. So we'll just work our way down them. So gross margin ratio is the first one. As a heading, we would use that to very quickly assess the technical efficiency of a business. So to work out a gross margin ratio, you take your gross profit, which is your output less your variable costs, and divide that by the total output of your farming business. A target, if you like, of above 60% is what we're looking for, but it's quite common to see farms between 50 and 59 as well, so don't panic if it's coming out there. Certainly want to see above 50. A couple of cautions to this ratio. They're quite sensitive to how the accounts have been done, so what's included in variable costs. Contracting is always one that throws a spanner in the works. Generally, we would have that in the fixed cost, but occasionally accounts will show it in variable. Adrian spoke before about trying to make better use of crops coming off the farm rather than buying them in. So that's something that would affect that margin, and certainly explains why the farm's performance is towards the top end of that chart, which is demonstrated by the red lines there. So that's the gross margin ratio. Operating efficiency ratio, it's a little bit more complicated. It uses something called EBITDA, which you may have heard accountants, banks, consultants talk about, which is earnings before interest, taxes, depreciation, and amortization. And you take that figure and you divide it by the output of the business. Again, the target above 35%, we see less farms hit that target than we do a gross margin one. Just a little bit trickier to hit, and we would essentially see that ratio as the ability of that business to generate cash and to cover its overheads. The farms towards the bottom end of that one, so we then have to start looking at the two of them together to see if we can find any trends or see where the issues are. So what we would initially look at there is say, well, the farm's actually performing technically well, so let's have a look through some of the fixed costs and see if we can improve the overall farm profit. For both of these ratios, it's valid to look at them as a standalone 1 year figure, but we would definitely look at them over time as well, because accounts are tax accounts at the end of the day. They're there for a purpose. So the trend over multiple years is quite important. And that also applies to the next ratio, the profit ratio, or net profit ratio, it's sometimes called, where we are looking at the profit on the accounts divided by the total output of the farm, how much money is left to pay the non-profit and loss items such as loan repayments, drawings, HP repayments, that kind of idea. There isn't necessarily a target for the profit ratio because it can be quite heavily affected by outside elements, weather, tax bills, etc., or tax requirements, I should say. So we would very much look at that one over time. And what we would want to see is either a consistent performance or a very good reason why there's outlying years. So draw a graph, put them on a graph and draw a line and see where that trend is heading. So they're the ones they're the first things we would look at in the profit and loss. And obviously there's a whole range of things we can look at after that, but on a very simplistic starting point level, that's what we'd look at. The last two on the slide, the current ratio is quite simply current assets to current liabilities. How much, and it's a short-term resilience measure for the business. So current assets being any asset that you could liquidate in a year, which wouldn't affect the normal running of the business. So I have seen current ratios where the dairy herd has been included, for example. Obviously, that would have a fairly serious impact on the running of the business. So that shouldn't be included in the assets. From the liability side, things like loans aren't included, but the requirements for 1 year payment would be. The one that always should be in there, though, is a farm overdraft. Ideally, we're looking for 2 to 1. And as I say, it's really just a measurement of how resilient a business can be in the short term. The gearing ratio is another resilience one, but that's looking more long term. So the gearing ratio is total liabilities to total assets, and shows the level of borrowing involved in the business, essentially. This one creates a little bit more debate. So we have that middle ground range of 25 to 50, over 50 being bad, under 50 being good. But I think we need to be a little bit careful in utilising it or using that one and then analysing it. It's quite possible that a very good business has over 50%, depending on its setup and how it's structured. And it could just be a timing thing as well. So, throwaway example, you could have a business that's just spent an awful lot of cash to improve efficiency, but that borrowing will actually be paid back really quickly. So you would expect the gearing ratio to go up, but then come down, and actually the business is more sustainable going forward anyway. So that's just a very quick fly through of the main ratios that we would analyse a business with.
Okay.
Thanks, David. Just a question that's come in. Sorry, Colin, go on.
No, on you go, James, on you go.
Question that's come in, David. It's often suggested that increasing output units to dilute overheads. Is this something that you would recommend?
Very much depends on the business. difficult one to answer. I mean, yeah, in theory, increasing output without increasing costs would improve your top 2 ratios, absolutely. But it would very much depend on that business's balance sheet, its current borrowing levels, and what it would need to borrow either now or what it would cost ongoing to do that. So you still have to keep an eye on the actual profit figure, if that makes sense. You still have to keep an eye on cash flow. But there is that argument, if you had a business that is entirely green all the way down, then yeah, that farm is a good business. So improving the scale of that business would seem a good idea. But there's a whole load of background stuff in there in terms of personalities and people and succession planning and everything else that needs to go into that.
I know we talked during the prep for today about borrowings per cow, but just slightly on that topic, if a farm has a consistently large overdraft, should they consider converting it to a long-term loan?
Short answer, yes. The slightly longer answer is the bank is probably going to be pushing them down that way anyway. There's definitely, we've seen, I think Colin would back this up, I think we've seen a few things about overdrafts being reduced, what they would call core overdrafts, so overdrafts that have always been there. You've got to keep an eye on affordability though. So why is that overdraft still there? Is it because the cash flow isn't actually in the business? And if that's the case, actually converting an overdraft to loans would suck more cash out over time. So I think yes is the answer. It's a good idea, but you've got to be very careful how you do it and have a good, I think we'll come on to budgets and business plans, but how are you going to create that cash flow to pay that loan back?
There's also been a question come in just in terms of definitions of those 5 headings on the left-hand side. What I'll do, rather than go through them now, is send those definitions out on the following follow-up email.
Yeah. Okay, thanks, James. Right, we've talked quite a lot about the KPIs and the ratios, etc. I just wonder now, Adrian and David, what's the benefits of doing all of this, going to all the trouble of collecting all this data? How do we best use it, and how would you see it being used going forward? So I suppose, Adrian, you've done a lot of this work. What's the main benefits you've seen?
The main driver was to find out where the profit of the business was, because I've said that there is a plan A and a plan B. And so I guess the plan B if I don't have a successor is what was I going to do as I get older, and I wanted to ease my workload and have, as I've explained, more time off. Was so as I could target the more productive enterprises and lose the less productive enterprises was the aim. And but again, also the enterprises that would be most profitable for my time going forward. If I was to drop a member of staff, for instance, I would then be thinking, right, well, if I drop a member of staff and the milk cows were to go in the future, what would I, how would I still have a sustainable business? And to be able to make them decisions, I needed to know which enterprise was profitable, which enterprise wasn't profitable, so I could have a good plan B.
Good, David. What do you see as the main benefits? I've got a couple of ideas of my own, but I'll let you go first.
In case I'm out of ideas, it's the what if. It's the what if analysis, isn't it? It's, as Adrian said, it's that plan A, plan B. So I think we're quite often asked to go in as consultants to go and produce some kind of budget figures or business plan going forward. But in doing that, we have to make sure that it's reasonable and in keeping with past performance. So, on the slide that's still on screen there, my initial view is we're not going to concentrate too much on the technical because, well, for two reasons. One, it's been changed recently and is still changing, and secondly, the top line analysis is showing that's not really it's not causing any problem. So don't try and fix what isn't broken for a start. So we would probably challenge some of the other costs and encourage Adrian to go and benchmark some of the less exciting ones to benchmark. So things like insurance, etc., something like that would be where we'd look to challenge you on, and then use all of that to then produce better, more robust budgets going forward.
Yeah, that's interesting. You said insurance, because I think my take from quite a lot of what we've done previously with benchmarking is in the benefits. It's the ones you write the big checks to. So look at them first, and just general benchmarking gives you a good idea if you're competitive in some of that. And the other thing I think it's really useful for is it takes a lot of the difficult conversations away, because if you're doing benchmarking, you've got the data, it makes it much easier to manage your nutritionist, agronomist, consultant, accountant, whoever, because you've got the figure there and it's benchmarked, and you can say, well, look, can you help me solve this problem, rather than saying you're charging me too much for something. So I think that's a big benefit. I think there's multiple benefits that we could go through, but I suppose now we've got this data going forward, how are we going to use it? Or if I'm a farmer who's not done this before and I'm just starting, I suppose we can get the big wins early, but how do we use this stuff going forward? Adrian, I'll come to you first.
Well, yeah, like I said before, it's so I can manage my business with knowledge. You see businesses go to the wall. The one that's just springing to mind is I remember Matt Bro were building machines, and they were brilliant machines. We owned two, but they went bankrupt because they were selling for below the cost of production. And we're fully aware that subsidies are changing. We can't afford to produce food for less than the cost of production. And there will be some farmers out there that subsidy check is all their profit. I'm guessing, hoping most of them aren't dairy farmers. But with the world is changing, subsidies are going, and even dairy farmers receive subsidy, and we all say thank you very much, don't we? We're going to take it if somebody's going to give us money. So to be able to make them decisions to have a profitable, sustainable business that can survive in a changing world, you need to know exactly where you stand, so that when the world changes, you can change with it, and you know which direction you can afford to go in. I'm a grazing farmer because I like to graze cows. I have two neighbours next door to me that don't turn their cows out at all. because that's their choice. One of them has a moss farm, so probably has got no choice anyway. But you have to do what you want to do, and if you want to do it, you'll hopefully make a success of it. Because if you don't want to do it, you're guaranteed you won't make a success. And I want to make money, so at the end of the day, I'm in business to make money, but I also want to enjoy what I'm doing in the process. And so it's to help make them decisions going forward that you can do something that you enjoy because you think you'll make a success of it because you enjoy it, but also you've got to be mindful that, you know, I enjoy playing rugby, but I can't make any money out of it. So that's not a good business decision, is it? My wife thinks it's a very bad business decision for me going playing in the old boys matches because one day I might not walk off the pitch. Might be carried off, mightn't I? But you make these life choices.
Yeah, no. David, quickly, I'll come to you.
Yeah, I thought we agreed we weren't talking about rugby, Adrian. That's a rabbit hole you don't want to go down with Colin.
So it's only time in 38 years we get to talk about it, so we should maybe take our chance.
Take a chance while it's here, yeah, absolutely. No, I think just again what Adrian said and what I said a few minutes ago. I think it's just knowing your position and being able to make. You know, we talk about make a quick decision in farming. Nothing's particularly quick in the grand scheme of things, but you still have to make a timely decision. So having all that information at your fingertips, and I suppose to an extent working out which pieces of information you've collected, Adrian, are the most useful, because you know things like the timesheets you don't want to carry on doing forever and ever. You've got the benefit, you've got the percentage split now, so use that as you go forward, and then maybe look at other areas where the time that's been spent on that previously can then be better used going forward. So I think, yeah, it's just putting yourself in a more solid position, and you know all about your business. So if anybody ever comes knocking, challenging it, i.e. a bank, an accountant, a consultant, you've got all the tools there to answer the question.
Yeah, I would agree with both of you. I think it's about just being armed with the information, so you're in control. And I think probably it's part of getting your business ducks in a row. So it's yeah, no, I think we're all thinking the same thing. I'm conscious of time, so maybe just move on. David, you were going to talk a little bit just about the bank ratios and what the bank look for. So do you want to just move on to that?
Yeah, not necessarily ratios, just I suppose just an overview of what we are seeing, and Colin, you've had a bit of a hand into this as well, to be fair, but it's just what we're seeing now, different banks, different bank managers asking for, and it has changed over the last few years, because it used to be very much how many assets have you got and how much borrowing you got, so they would call that loan to value, and we're seeing a steady shift following the financial crisis. And you know, I'll stand up for bank managers here. They have to ask this now. They have to look at affordability. So we're seeing a lot more banks asking for more detailed cash flows to assess that affordability, or as I put it in the second line there, the debt serviceability. So how is your business set up to make sure it can cope with the cash flow requirements of any borrowing? Debt per cow, James, there we go, it is featured in there. Debt per cow, I think, is it's a tricky one. It's a divisive one. We can see a range. We've got clients anywhere from literally zero up to above £12,000 a cow, quite happily. We're on a conversation, and even higher figures have been quoted, but it's essentially how hard do the cows have to work. So that is still a figure that some bank managers will come back with. As a note to caution on that, yeah, it's not the be all and end all, and the one that I'll always get thrown back at me, and quite rightly, is, well, how do you reduce the debt per cow? You actually borrow more money to buy more cows. That as long as that is less than the cost of per cow, that reduces it. So I think you've got to be a wee bit careful on that one. Banks are still, always have done, but they're still looking at past performance as well. And this is, we've just touched on knowing the story of your business and knowing the reasoning and the logic behind the numbers. Having a small tax bill is really good. But if your profit, let's say you've got 100 cows and your profit is £10,000, it's a profit, but is it enough to then pay off repayments and pay drawings and everything else the business needs? So again, profits going forward, cash flow going back is a relatively common thing over the last few years. So again, just be prepared to explain that. And all that really builds into producing full budgets. Yes, we do them as consultants, but I would always encourage a farmer to do them as well. And when I say a full budget, I don't just mean more and more paperwork. I mean going into some of the nuts and bolts, as Adrian has done, looking at his business, and really building that budget up from first principles. So how many cows have you got? How many litres are they producing? What's the price of the milk? When do they calve? What does the milk profile look like? As I say, really going into the nuts and bolts so that when you go through the year, you can actually monitor your budget with actuals. So we would call them MMIs, management information accounts, and making sure that your budget stays on track. You will have a vastly different conversation if you've missed budget by 10,000 and you can show that you've had all your assumptions. So you've got the number of cows you said you would, the litres you said you would, the feed costs you said you would, but you can prove the milk price has been the source. You'll have a massively different conversation compared to if you couldn't prove all the variables. So really important to get the nuts and bolts in there. And that really comes on to the last point, the kind of technical KPIs. We've talked about the KPI Express tool. I know Adrian does cost things in the background as well. So doing all of these things, just again to build up that picture of a business and provide ammunition, storytelling, backup, whatever we want to call it, but making sure that you can prove when challenged that you know exactly how your business is performing and what the net effect on your budget that's had.
Yeah, I think I would agree, David. It's definitely more about your history and the people and the story the bank look for. I think it's definitely changed than from dealing day to day with your bank manager, and now your bank manager seems to have to get it through the credit teams. So they've really got to believe in your story, and I think that vision and planning ahead that Adrian spoke about is really valid, because if you're thinking 5 years ahead, you really have to start thinking now. It's not all just about saving tax. We'll have to try and have a bit of history, and I've got quite a lot of clients that are on that, they're on that journey, so that they can make decisions in 5 years' time. Because ultimately, I think with a lot of them, timing rarely works out when opportunities arise, but there will be more opportunities going forward. So, Adrian, have you got anything more to add just on the banking part?
Adrian, just take yourself off mute.
Sorry, yeah, keep trying to keep everything under control. Yeah, I don't. My bank manager left, and then I've been put on telephone consultancy. I don't have one as such, and we haven't done anything drastic within the business in the last few years. We entered a mid-tier stewardship scheme, so we had to. We spent quite a lot of money on improvements, so you have to spend up front and then you get that back. So there was just a brief conversation to say I need a bit more money till that comes through. But as far as the bank's concerned, yeah, I meet my overdraft, don't go over the limit, and they're doing quite happy because they're making a profit out of my borrowings in my overdraft, and I'm causing them any grief. So. Yeah, if plan A comes ahead and we want to do something drastic, then yeah, I can imagine I'm going to need all this and more besides, because we will be looking at borrowing quite a large sum of money going forward. And I hope my figures prove that I've been efficient. I mean, I'm on a tenanted farm, and I'm not in a supermarket contract, so therefore I have to be fitter and more efficient than those farmers that have one or the other, because they have the joy of a better milk price or not have a rent to pay. I mean, don't get me wrong, some of the owner occupiers will have borrowed money because they'll have bought the farms, and good luck to them. But for me to stand toe to toe with a man on a supermarket contract, the only thing I can be is more efficient. I can't influence the fact that they're getting more money than I am, but I can influence how efficient I am. So I can go to my bank manager and prove that actually I'm doing a very, very good job. And I'm a good horse to back, so to speak. Even though I am on a lower milk price, I can still return the profits that they are. We all know milk prices fluctuate wildly. 5 years ago, which we just did on the CFPs, which scared me. 5 years ago, my 2000 and 16, I think it was 17. My average milk price was 21.4 pence for the year, and I still turned a profit that year. Now, I'm not quite sure how I did back then, but you cut your cloth when you have to. And some of the other lads in the grazing group, they never dropped below 29 pence, and we're still only at 28, and they're still managing to, I wouldn't say beat them, or still managing to be in the same league, you might say, when it comes to profitability, which I'm quite pleased about.
Yeah, no, that's all really valid stuff. I'm just conscious of time, so we'll maybe
just before we do move on,
sorry, James.
Colin.
Yeah.
David, just a question that's come in. If someone's got a lot of hire purchase with several different companies, what would the bank's view be on this? What would
Depends how much other debts. Yeah, it depends. HP. So again, it's that storytelling, it's that narrative, and when I say storytelling, it's not the Hans Christian Andersen variety. It's the actual variety. So HP itself isn't a bad thing, keeping things up to date. But if HP is constantly renewed and constantly goes up, we've seen plenty of businesses with HP that never goes down. It's just a constant cash drain. So in a dairy context, HP of a new parlour, for example, absolutely fine, no issue. HP of a new tractor every 3 years, the bank will start to question that if the cash flow doesn't support it. So in terms of the bank's view of different HPs, I don't think they'll have a strong opinion whether it's across multiple people or not. They will just view it as debt, and look at the business's suitability to service it. From a business point of view, it makes sense to have some debt spread out a little bit. It doesn't all have to be in one place. So it's very much, as I say, the bank will very much look at it as total debt rather than split it out into individual companies or places.
Yeah, James, I think the other thing actually with HP is the challenges at the rate machinery is new machinery is going up. It's quite difficult when you go to replace a machine. The new HP payment can be considerably higher than the previous one that's replacing. So right, good. Yeah, I'm conscious of time. So David, we're going to do a little bit. So if I am a farmer that's not particularly interested in the figures and I want to get into benchmarking, what tools are there out there that can help us, get into benchmarking easily? Yeah, so you want to automate it as much as possible. That's probably the first thing. So in terms of simple tools, from the technical side, the KPI Express tool is really good, nice and easy starting point. It's designed as a quick and easy one, so there are limitations to it, but if you get to the limitations, then you've made some progress at that stage. So I think from a technical point of view, that dairy costings most people will do anyway, but if you don't, certainly have a look at that. When you go up through the levels, I think automation is really, really important. So most of the stuff we've done for Adrian, and in fact most of the stuff that Adrian's done himself, it is technically possible to automate going forward. So tools like cloud accounting make that an awful lot easier, and there's several providers of cloud accounting software. But you can then add plugins. So do a bit of research on your accounting software and find out what it can do, not just the accounts, but what it can then link to or send data to that you can then automate, because most farms have to do a VAT return at some stage. All the coding is done at that point, so all the data is absolutely there to do quite a lot of in-depth benchmarking, and there's tools that plug into the cloud accounting platforms that even automate the coding. So it is possible now to literally get let's say your feed bill emailed into a system, and it automatically codes it depending on the feed name, and puts the tonnages in, puts the prices in, etc. So if you're going to do this, you want to get the system as simple as possible, and automation is definitely high up on that list, I would say. No, that's good, and it's quite I think, as you say, the next 5 years automation is going to go to the next step. Certainly even I take pictures on my phone now of invoices or fuel bills and when you fill the vehicle up. So yeah, it certainly moved on. So now one of the other things we're tasked with, James, is how do we make a plan going forward, and as a farmer, and devise the financial targets. So I was just going to say a few words on that in terms of some of the work that I do, and I think we've probably covered quite a lot of it today. I think the most important thing probably is and the reason I asked Adrian at the beginning was, what's your vision? I think it is about getting your ducks in a row before you start doing any financial planning. So it's a whole business. You've got to get your ducks in a row in terms of the simplest of things. Have you got wills? Have you got power of attorney? Even at that level, to make sure everything is where it should be. And then, I think also too, making full use of your professional network, I think is really important, and getting your accountant involved, your solicitor involved if need be, discussing the succession, family, with family, having these chats at early doors, and then moving on to the financials. And I think, David, you were going to say just a bit about that probably, in terms of budgets, and I think you've possibly covered it already, actually.
Yeah, I think we've covered most of it in terms of budgets, but just making sure that long-term plan is in place, be it for plan A or B, or be it for capital investment for tax purposes, whatever the purpose is. It's just having that long-term vision.
Yeah, okay. Adrian, and for making a plan going forward on the financial targets, I take it you've got the historic data. How do you plan, or how do you plan to set your targets?
Well, I'm kind of hoping I'm going to have a visit from you two, and we're going to sit down on the table, and we're going to crunch deeper into the numbers we've produced. I guess that's my plan, is get some extra help to some skilled help to use the figures that I've come up with, because you can only take them so far yourself with the knowledge you've got, and it's good then to have a sounding board or professional advice and expertise on what we should be looking at, and what we should be targeting to do. I think so. Yeah, that's the plan.
Yeah, no, I think that all makes sense. Since I'm probably got a bit of a red character too, we'll probably just be saying we'll do it, and David will have to check the numbers. But
Jeff wants
we'll
an
come up with a
invoice.
plan.
He's here right now.
You'll talk about it and I'll do the work, Colin. Is that what you're saying there?
Yeah. Right. I think the other thing that we had to cover, James, was I think one of the things the challenges you gave us was to plan what plan should we have for Brexit, ELMS, and the loss of BPS. So I think we'll try and cover that. I'll probably go to Adrian first and just see what your thoughts are on that.
Sorry, I just was disturbing my son there. You just have to remember what the question was, Colin. This is the son that's supposed to be doing his GCSEs that refuses to do much work. But anyway.
Right, no, what was the plan, your plan for Brexit and ELMS and the loss of BPS going forward? What's your thought process or your logic on that?
Well, my thought process on the fact of that is, I guess it comes back to be sportsman in me, in that it's a race, isn't it? You've got to be more, it's a horrible thing to say, but you just have to make sure you're more profitable than the next man. And that is my plan at the moment. Is I'm fully aware that we have to target the enterprises that are more profitable. That helps me keep at the front of the race, and make sure that I'm in a position going forward where I'm got a sustainable business, and try. And they always said try and farm without subsidy. When they brought area payments in, all you consultants kept saying to everybody, you should be able to put that in a bank account and not spend it. Well, if you could put it in a bank account and not spend it, you didn't need it. So the government should never have paid you it. Was sort of my view at the time, and now we're getting to that point where actually, yeah, well, if I can't put it in a bank account and not spend it next year, when it's, I'm going to be a 30% reduction next year, and then 50 the year after, I have to get fitter to survive.
Yeah,
that makes
absolutely,
sense.
Absolutely. David, what's your thoughts on that one?
Probably twofold. First part is just exactly that. We know what's coming. It's not now a surprise. But I think as an industry, we still need to be, I think we're very bad as an industry. I think a couple of years ago, Colin and I have had this conversation before, but there's nothing surer if you read something that's going to happen on the front page of the farming press, then sure as day it will happen later on. So I think part of me says, well, the industry should still be arguing for, and it might not be subsidy, but other funding coming in. So I suspect that'll still be there. So it's how we go about getting that. But in the meantime, control what you can control. And that's the mixture and balance of your enterprises and the performance of them, which we've made a really good start in terms of analysing them. So it's just building that going forward and making sure that's optimised.
Yeah, I think you've probably both kind of stole my thunder on what I was going to say, but I think, yeah, definitely, you know, it's about your circle of influence rather than a circle of concern type approach, and just, you know, influence the things you can influence. Let's make sure we're doing that. And also back to what Adrian said, you know, I have to watch The Lion King, I don't know how many times a week, and I don't want to be that last wildebeest getting caught. I want to be in at the front of the pack, and I think that's what most farming businesses have to do, because the last man standing, I suspect, will make a lot of money. So we just got to make sure that we're efficient. So no, I think that's all good. I don't think. Well, I think that's probably us covered everything that we're meant to cover, James. And I'm just conscious of time, so I'll probably just hand back to you.
I think that's a fantastic job. Just to add to that as well, surrounding yourself with people that are going to challenge you and challenge your business is also important. Adrian's mentioned that he's part of a discussion group. One of the questions that has come in, when you first joined that discussion group, Adrian, how did you feel? What was your experience?
When I first, I knew quite a lot of the characters there, because quite a lot of local farmers. What did I feel? Thought I could see the potential when I joined that. I felt that instead of, if you're not careful being a farmer, you can be a bit of an island, and the world can sort of go on around you. You're not careful, and I felt like that actually getting involved with them. I've never been a big consultant fan per se, because I think mother of all invention is a necessity, and the consultant doesn't have to survive. It's the farmer that has to survive. He has to adapt his business and go forward. And I like the idea of actually having 12, well, there's 12 of us in the group, so 11 other farmers on my farm looking at me going, why are you doing it like that? And you're going, not sure. So yeah, I could see a great potential in that, in 12 like-minded farmers all heading in the same direction, all willing to share as much information as possible and to help each other out as much as possible, and be we're sort of part of a team in that we're all wanting each other to succeed. And yeah, how did I feel? I felt there's great potential. That's what I felt. I felt there's great potential in taking the business forward in a direction I wanted to go, as in making best use of grass. So yeah, quite excited really about it, and still am, because 3 years in, and there's still a lot to learn, and still I've got a lot of improving to do.
Good. Take-home messages from the three of you. We've discussed a lot in the last hour and a half. There's been plenty of detail, plenty of advice, but what would be the one thing that you would want people to take away from what they've heard today? So David, I'm going to put you on the spot. If you can go first, Colin, and then we'll finish off on Adrian.
I think I'll keep it to a couple of things, to be honest. The first one is, if you're not doing some kind of benchmarking, do it. Be it through a KPI Express tool, through some of the financials. Just make a start and don't worry too much about how you're doing it. Just do it, and do it over multiple years. And secondly, start to build that into a plan and hopefully some kind of budget going forward.
I think I would say make sure and get your ducks in a row in terms of the business. You know, have a plan, have a vision, have all that stuff that farmers may think can be quite fluffy and they don't need to think about that, and just get on with the farming. But it's quite important to plan ahead and just get the basics in place to start with, and then build on the benchmark and the stuff that David's talking about. I think, James, would be my kind of take home.
Thank you. And Adrian.
Yeah, David and Colin are great, but unless you know your costs, you can't do either of them. So, I mean, you've got to know your costs, and the livestock unit way of splitting things out seemed quite appropriate at the beginning of this journey I'm on. But the further you get into it, the more you want it to be accurate. You can't make a decision, you know, you split like going into a pub and going to buy a pint of beer and you're going, well, do I want that one or that one? Well, if that one's £5 and that one's 10 quid, most farmers will take the £5 one. And unless you know that, you can't make that decision. And you can't make them decisions unless you sort of know your costs. You've got to know them.
Thank you very much, and thank you to the three of you for your time today and your comments and input. It's been really valuable. We've had some good questions as well, and I hope that we've provided some useful answers. And I will reiterate that if anybody's listening that needs further support, please do not hesitate to contact your local AHDB team member to help. There's you know, from our point of view, take-home messages, there's plenty of resources there that are on offer, listed, and will be emailed out to you after this webinar. In terms of what's happening next, as mentioned, there'll be an email with a link to the recording of this webinar and links to the resources we've mentioned. Do keep a lookout on our social media platforms for any upcoming webinars that we've got, and encourage you to have a look at the AHDB Dairy Facebook page where you can keep in touch with us. If you're not aware, tomorrow we've got another webinar tackling silage costs and reducing waste. And also next week, 2 webinars that might be of interest to you, dispelling the myths about carbon sequestration and reducing dairy electricity costs. So do make sure that you signed up for those. Don't forget, if you need to allocate your Dairy Pro points for today, type your name, farm name and membership number into the questions box to register. But it just leaves me to say thanks very much for joining us today on the webinar. I hope that you found it useful, and to reassure you that AHDB continues to be here for you, and your local teams would be happy to hear from you if there's anything else that we can do to help further. Thank you very much, everyone, and have a good afternoon.